Hello, everyone, and welcome to this webinar called Partnerships and Alignment, a Global Journey in Catalytic Capital. My name is Ashima Thomas, and I'm the Director of Knowledge and Insights at AVPN, and we're based in Singapore. AVPN is a network of around 600 members spanning 33 countries, and our aim is to increase the flow of capital into the social sector in Asia, and that's financial, human, and intellectual capital. This is the first webinar in a series that we're doing throughout the year on the topic of catalytic capital. The series is born out of a partnership with the Catalytic Capital Consortium, with the aim of inspiring wealth holders and asset managers to adopt the deployment of catalytic capital across the globe because of its potential to support underserved communities, underfunded sectors, and early stage innovation. So AVPN, along with its family of networks, which is AVPA, EVPA, and Latimpacto, who we are all brought together through IVPC. We've spent the last 18 months furthering this work through research, convenings, workshops, and other engagements. And between our networks, as you can see on the screen, we cover a really wide breadth of the globe, which is why we're now consolidating all of our findings, the findings of our work, to highlight the cross-border similarities and differences in catalytic capital deployment and emphasizing how we can actually learn from each other sitting in different parts of the world. So we're doing this through this webinar series and other events and reports and outputs, which we'll share more about at the end of this session. But this is the first of 4 webinars brought to you by IVPC, which is focusing on the topic of partnership and alignment in catalytic capital, and it's featuring members from AVPN and AVPA. So this webinar is being recorded, and it will be shared on AVPN's Catalytic Capital webpage, and we'll have more details about that later on as well. So I'm now going to hand over to our moderator for this session, who is Frank Aswani. He is the Chief Executive Officer of AVPA, our sister network, which is based in Nairobi. Over to you, Frank.
Thank you, Ashma, and thank you everyone for making time to join us today. If anyone was wondering whether this Aswani was Indian, I'm not. I'm Kenyan. I'm the CEO of AVPA, which is the sister network in Africa to AVPN. We are all doing something very similar to what AVPN is doing in Asia to mobilize capital for impact. I'm super excited to be moderating this panel today, where we have some exciting conversations with really distinguished speakers. And I do recognize that you probably want to spend more time listening to the panelists and what they have to say. These are people who are doing some really exciting stuff and very pertinent and relevant to the topic of today's conversation. So what I'll do is I will first of all give a very brief introduction to each of the speakers, and then I'll give them a minute each just to give us a sense of how catalytic capital is relevant to their work before we get into the conversation of today. And it's a real pleasure to also discuss just the unique and diversity of the panel today. All of them are doing some really interesting work broadly in the impact space. Some of them are working across Asia and Africa, and they're all kind of coming from across different sectors of pure for-profit, foundation work, and network building. So without further ado, first of all, let me introduce Amalate, who is the CEO of Impact Investing Ghana. I'm a big fan of Ama and the work that she's doing in Ghana. Impact Investing Ghana is an initiative to mobilize about $1 billion in funds and build the ecosystem of impact investing in Ghana and West Africa. Ama has over 16 years of experience as a director in the social enterprise, impact investing, and nonprofit sectors, and has managed teams across multiple countries in Africa: Ghana, Ethiopia, Tanzania, Rwanda, Senegal, Chad, and DRC. Ama, welcome. Divya Patel is the Chief Operating Officer at Ishq Tolam Foundation, a philanthropic organization that provides undeserved individuals access to quality education, healthcare, and skills training in Indonesia, Nigeria, and Singapore. And one of the few, Divya, if I'm not wrong, that works across Asia and Africa. As Chief Operating Officer, Divya steers the design of Ishq's programs and grant-making strategies, building global partnerships, and also championing innovation in impact financing and the use of alternate financial instruments to fund social change projects and bring greater participation from the private sector in funding solutions. Welcome, Divya. And Wonyung, Kim is a founding member at Previs Partners since 2006. He's an executive director managing impact investing and blended finance of early stage and later stage startups. With his years of expertise in company building, business development, IT, services, and corporate operations, he focuses on deal sourcing, value up, and portfolio management of the impact fund. He works with different financing structures such as equity funds, government grant fund, ODA grant fund, and social financing loans. So welcome, panelists. Let me start off with you, Divya, and because you're a foundation working in Nigeria and in Asia. Just very briefly, in less than a minute, please tell us how Catalytic Capital is relevant for your work and a bit about your organization.
Thank you so much, Frank. So as you mentioned, we are a philanthropic organization with operations in Singapore, Indonesia, and Nigeria. We are an operating foundation, which means we run our own programs, but we're also grant making. But being a foundation, our key focus has always been around maximizing impact. And when we look at maximizing impact, we work in all our different geographies, and we look at the ecosystem in the different geographies, and we look at, what is the best way that we can maximize our impact and stay a bit more agnostic to the tool that we would be using. And within this, in certain geographies, we have found that, social enterprises are already quite robust in the way that they are operating. In certain geographies, we find that there are already some established impact funds, which give us an opportunity to invest. So, we use catalytic capital in those instances based on the opportunities that the geography or the ecosystem is presenting us so that we kind of get to our end goal of maximizing impact.
Super, Divya. Thank you so much. And as we go through this webinar, I'd highly encourage the audience to please put your questions in the Q&A chat box. There's a special Q&A box. If you can just put your questions there, and we'll take them as we go along. I'm going to try and answer and get to as many of them as possible. So over to you, Ama, and the work that you do in Ghana. Tell us a bit about what you do and why is this topic of today relevant to the work that you do?
Thank you, Frank. Catalytic capital is critical to what we do. We have an SME financing gap of $331 million across Africa. In Ghana, it's $331 billion. In Ghana, it's $5 billion. And for us, impact means being able to deliver sustainable jobs by businesses that are carbon neutral, by businesses sort of inventing a new way of doing business so that Africa develops in a way that takes into account the unique world in which we are working in, which is a world that is in crisis, that has an urgent climate crisis. And so catalytic capital is needed. It's needed for innovating new vehicles that aren't already functioning. It's needed for scaling up initiatives that are working. It's needed for filling up gaps in the ecosystem, capital that's willing to take on more risk. And so we've taken a very we've embraced catalytic capital. We've had the pleasure of working with you, Frank, on a number of webinars to share research that we've done. We've been able to work with our sister NABs and also with AVPA around being able to make catalytic capital to really get catalytic capital providers to do what catalytic capital is supposed to do, which is fill in the gaps for innovation, take on more risk, and unlock additional financing.
Fantastic, excellent. Thank you, Amanda. I'm looking forward to digging a bit deeper into the work that you do. Over to you, Wonyung, and the work that you do as an impact fund, and you come in from the profit-making side of the impact investment spectrum. So how is this touching the work that you do, and why is this important for you?
Thank you, Frank. So Previs Partners is based in Seoul, Korea, and we do impact investing as a commercial investor, meaning that we are targeting market returns or above market returns on our investment. When we are approaching Southeast Asia and also East Africa, we use this blended finance as a structure to actually not only meet the impact target that we have, but also meet the financial return expectations. Working on this blended finance, our partner is Koika, and we are their first partner working on this. So it was a huge challenge for us as a commercial impact investor to actually combine Koika's grant capital together and use it as a blended finance, and still at the same time maintaining our impact investment thesis and also meeting the target returns at a market or above market rate. And at the same time, there is some certain requirements from those grant makers. So we also have to manage how we can actually achieve those target goals for them at the same time. So blended finance is a huge part of what we do in those two areas, especially in Southeast Asia. We're focusing in Indonesia in two sectors, forestry and agriculture, and to energy and environment sector. And also in Rwanda, same as there as well.
It'll be really interesting. And I think what's also very exciting about this panel is how we bring the learnings from Africa and Asia together, because I strongly believe we are solving very similar problems in very similar environments. And the learnings that we can move along, especially in the global south, I think can be hugely beneficial to the rate at which we execute and avoid mistakes, but also advance things like the use of catalytic capital across various spaces to unlock more capital for impact. So let me talk to you about some of the stuff that we're really focusing on today, which is around partnerships. And I'm going to start off with you. What steps does Impact Invest in Ghana take to establish a clear foundation for business relationships, especially with impact investors? And how do you emphasize accountability and use of metrics to make sure that you're advancing the broader ecosystem?
Thank you, Frank. I'd love to answer the question in the context of one of the catalytic capital vehicles that we're sponsoring. It's a $75 million fund of funds whose goal is to unlock local pension funding for SMEs, as well as to seed emerging fund managers and support them to come to a first close. And so we want this facility to be able to be leveraged 5 to 7 times by the fund managers to unlock capital. We want to also bring in pensions into the SME space, a space that they have not been in before. And we want to be catalytic. And there are a variety of partners involved. And to be able to bring in the pensions, we needed to provide some level of de-risking that is provided. And that is one of the things that catalytic capital can do. It can come in and take provide a guarantee or take a first loss position and de-risk. So we have those catalytic partners as partners. Then we have pensions. They are a regulated industry, a conservative industry. It's you and I's pensions. Their clients punish them if they lose any money. And so they are commercial. They want to be sure that they want to diversify, and they have regulatory pressure to diversify, but they want to make sure that they will make a return. And then we have other partners in the ecosystem, the regulator, etc. And so we approached it with two things. One was finding that shared interest. People are who they are. And the fact that we have all these social problems will not change the identity of the key institutions that have to come together to partner. So first step is understanding the structures of the institutions, the no-go areas and the areas where there's space for innovation, and then to figure out a shared partnership. And so for pensions, no-go area was we can't make a loss. We're willing to innovate. We're willing to participate. Catalytic capital providers had different goals, and we had an intense 1-year design sprint that involved all these different partners to come to that alignment so that we could have a vehicle designed that could meet the various objectives. And it meant that we needed to make design choices that left some partners behind. Not everyone who we would have liked to draw in could play. So for example, the structure we have now was not attractive for development finance institutions, but that was a trade-off we had to make because the goal was to unlock local pensions. And so once you start off with that, with aligning interest, accountability becomes easy because people have committed to things that they're actually able to deliver. And then it flows through from the fund of funds itself being accountable to investors, both catalytic and commercial, like the pensions, and to its investment thesis, et cetera, et cetera. And those, it becomes easier to both hold people accountable, to be accountable, and to build on the partnership to do other things. And we are already doing that. We're now in operational setup of the fund of funds, but there are already conversations with those who were left behind around what does the second phase look like.
You know, that would be really awesome. If you think about where most of the capital sits on the continent that could really do a lot more in terms of what it does, pension funds are a key target group. And so I think we're all really watching keenly how you progress with that particular initiative. A lot of the next steps in many other countries is resting on your success. So we're wishing you all the best on that particular initiative. No pressure just yet. So let's go on to Onyong. And Onyong, how have you worked with COICA as an impact investor in a blended finance structure? Because you mentioned they're your key partners in having to meet the adjusted risk returns expectations. And do you have any key considerations or lessons you've learned through this process?
So for those of you who don't know who COICA is an ODA agency in Korea, just like USAID or JICA in Japan. One of the things that COICA in early, I guess, before 2015, they were exploring the area of doing impact investing. And at that time, they were contacting us how they can actually do this impact investing, where they can do this, how they can do this, and etc. So, and the reason I think we were their first a partner in candidate was because even before 2015, we already had our presence in Asia. So we wanted to duplicate what we were doing in Korea, doing impact investing in other countries, and we were also looking for a way to do it. A simple way to do it is just having a fund, overseas fund that can go cross-border and making the investment. However, the situation is not that simple. As you can see, the areas of the investment that we want to do, agriculture, forestry, energy, environment, these are not very sexy areas for VC investments or even PE investments. So we had to find a way where we can actually maintain our investment thesis and at the same time, have a way to draw other sources of capital so that we can actually make the investment in those areas. And that's where COICA comes in. So we were having, maybe I think in a similar timing, they were thinking about impact investing. We were thinking about doing this outside of Korea. And that's where we sort of clicked together. However, when we actually met in the beginning, COICA wanted to take us to Palestine. And at that time, Palestine was, they had a lot of issues going on. And COICA wanted to do something differently by supporting the entrepreneurs there in Palestine. We saw a huge potential there. We ended up not doing anything there because geographically, it takes too long to get to Palestine. So even though we can make the investment instantly, there was no way for us to do any kind of portfolio management. This is something that I will mention later on. So that's how we started to discuss about having this blended finance, and in the end we decided to do blended finance in Indonesia and Vietnam, which of these two countries made a lot of sense for us as a commercial impact investor, and also made a lot of sense for COICA. When I say it makes a lot of sense for an impact investor, we have to see if there is an investment ecosystem. If there is no investment ecosystem, even though you make the investment, there is no way that it can step up to the next level. One easy way to look for that is if there are any unicorn companies in that country. For example, in Indonesia at that time, I think there were at least 4 to 5 unicorn companies, and Vietnam as well. So we know that there is certain startup ecosystem there where we can make the initial investment, and then there will be a follow-on investment afterwards. If there is no this kind of ecosystem, then in the beginning, what you're doing, it can be in structure of blended finance, but not actually a really commercial impact investing. So that's sort of the beginning. I have a lot more to share about how we started this, but let me just keep it to that and try to follow with any other questions.
So Wanyong, in essence, so at the very beginning, you are already thinking about exit and what happens when you get to the point where you need more people to take this initiative to scale. Am I right in that, making that assumption?
Definitely. Unlike Divya or Ama, because we have this the nature of the investment, right, is to make the returns from the investment. So definitely, yes, yeah.
Okay, and I think you covered a very interesting thing in the sense that your statement about saying that some of the sectors that you cover are not, for lack of a better word, the very sexy sectors that many investors go after. But that's the role of investing. Is we're the kind of investors who go for the tough things to do.
Yes, yeah, definitely. We have to do something that's challenging. We have to do something that's impossible. That's where our place is.
Yes, and the right things to do are hard things to do sometimes. So this is the encouraging thing about the impact players.
Definitely.
Yeah, excellent. So Divya, over to you. And for those of you who are Nigerian, you will know Divya's mother institution through Indomie, probably Africa's most famous snack, very well known across the continent. And Divya, just speaking to you at ISHK as an operating foundation, has your approach to partnership evolved as you've grown your impact investing portfolio?
So that's a great question, Frank, and something that we have thought about a little bit internally. But I think, coming back to what I had shared earlier, that for us, our foundation, the focus really is maximizing impact. And in everything that we do, rather than looking at an approach of, approaching different partners or different, funders or collaborators in the ecosystem in a very different way, what we decided to do was to really focus on our ethos. And Sangeeta, if you could just help me just flash the slide that I shared with you, which just talks about our ethos as well. So thank you so much. So this is our ethos at ISHK. So we, pride ourselves as being impact-driven, responsible, committed, collaborative, and continuously improving. And within this, if I was just to touch a little bit on a few areas, such as being human-centered, evidence-based, we do due diligence on all our projects, on all our partners. We look at accountability as being something, which is two ways. We're accountable to our own internal board and our team members, but also we expect that accountability externally. We have a very long-term view towards our partnerships, our purpose, and our communities. We really look at collaboration and we think about it from the perspective of, we don't want to reinvent the wheel. So where can we either add value or can another party add value to us? And also very importantly, what are some of the best practices and emerging ideas as well, right? So that's the reason why, despite being an operating foundation that designs our own programs, runs our own programs, has our teams on the grounds, doing that for us as well, we also participate in things like impact investing and catalytic capital, because we believe that, things, that they are a good solution in certain instances. And, like what Emma was mentioning earlier, they do help to de-risk. They help to really take that first loss in certain instances, which is then needed to bring in, other individuals or other organizations from the ecosystem as well. So because this is something that we have created very intentionally, this has been something that has been created not just by like a management level, it's been something that's been created by our teams and endorsed by our board. It's really very core to how we operate. So rather than having a view where we operate and we approach different partnerships in a different way, it's almost like we are looking for these sort of qualities in all the partners that we have. And this could be somebody who is a programmatic partner. It could be somebody that we're looking to give a grant to, somebody that we're looking to partner with, around knowledge, or somebody that we're looking to partner with in impact investing. And using this ethos as the core of our identity, what we also look at doing is seeing how can we also, share some learnings across. So what are we learning from, the impact investing side? So, some of the things that, Wanyong mentioned earlier, which is also around how can we really balance returns on impact as well as returns on financials as well, right? And so should a certain part of our portfolio be looking at that, because it also gives us an opportunity to recycle our capital, which grant making doesn't as well, right? So also trying to understand where can we kind of learn things from one side and apply that to the other. So just coming back to the impact investing side, having more rigor in a lot of our impact investment deals that we see around impact measurement, impact management. How do we bring that across to the grant side? How do we bring, what we learn ourselves as an operating foundation and the programmatic side of it, how do we bring that learning on the ground and empathy sometimes to our financial partners as well, right? So we look at it, as having our ethos guide us, but then, using it as a tool to like partner equally with everybody and learn and, cross-share those learnings across.
Yeah, Divya, and this is really, it's really encouraging to watch you make that transition as a foundation into the impact space, because the world needs a lot more of you to be doing this. If you think about it, we're technically in the world, we're not really short of capital, we're short of risk capital.
Absolutely.
And what are we doing to help really unlock that? So very encouraging to see some of you taking this bold move to move in this direction. And I'm hoping you can share and teach a lot to other foundations who are looking to make this similar move in the impact space. So it's really great to see this. So let me just shift gears a bit with my panelists. And as I said, I encourage the audience, please put questions in the Q&A box. So Zoe, to your questions about the sectors that will be covered in this webinar, hopefully through that initial conversations, you've got that addressed. And thank you for your question. So let's talk about some of the challenges you have all faced and how you work through them. So I'll start off this time with Wanyunga and ask you at Crevis, for example, how did you structure your blended finance vehicles to work with organizations like Koika and private equity investors?
So structuring blended finance is not so difficult, actually. So there are several archetypes to blended finance where you have your equity and there will be a first loss capital, or there could be a debt and an equity with a guarantee or an insurance. Also, there can be a technical assistance facility that is attached to the blended finance. So there are these archetypes that are available. I think what's challenging is actually structuring the transaction. For example, the equity and the loan transaction is quite different from the grant transaction, especially for a for-profit company like us. For example, if Koika funds, as a first loss capital to the blended finance that we run, then in order to provide the grant to the investee, as a for-profit company, if we give the grant directly to that company, it will be perceived as an operation income, which in the end, the company needs to pay the corporate tax for it. So what we need to do is we need to find another non-profit organization who can actually disperse that as a grant so that it's more beneficial to the company and right on more to the purpose of the capital. And also making the equity transaction is not always so easy to many of these countries. For example, if the company that we want to invest in Indonesia and as a foreign direct investment, the company needs to have at least 10 billion rupiah in paid up capital. And for early stage companies, they don't have that 10 billion rupiah. And what that makes us to do is we need to find a different approach in making the investment, or what we need to do is we need to make the investment either in convertible loan note or as a loan, and later on expecting that there is a follow-on investment that will meet the minimum requirement for them to actually convert their entity into a foreign direct investment ready company, or set up another entity in Singapore, which works as a holding company structure and have a wholly owned subsidiary structure underneath it. So again, structuring the blended finance, it's out there. It's not so difficult. And what you need to do is you need to find the one that best meets your goal. What is challenging is actually structuring the transaction of the equity, loan, or the grant.
That's really good to hear, because I think many people, when they hear the whole concept of moving into impact investing, get a bit intimidated with thinking that it's such a difficult thing and it's for others, not us. So it's great to hear that you found it fairly comfortable process to work through. And once again, hopefully we can really learn from some of you early pioneers who were working through some of these kind of innovative finance vehicles. So let me move on to Divya and just from your perspective, what partnerships are needed for private wealth holders and foundations entering the impact space to be able to transition well? And what have you guys learned from the work that you've done? What do you think you really want to advance and move on doing better in your future deals?
Thanks so much, Frank. And I think it's almost building on the point that you just made. I think the whole concept of impact investing sometimes feels a bit overwhelming for wealth owners when they are thinking about impact, because there is still a little bit of an inherent conflict between philanthropy and what traditional philanthropy represents. And traditional philanthropy really represents giving money away a lot more to charitable causes, almost sometimes demanding accountability feels uncomfortable sometimes for people when they are thinking about things from a philanthropic perspective, because you're meant to be philanthropic, you're meant to be charitable, you're meant to be giving, you're not meant to be so hard on the individuals that you're giving. And there is still a very strong feel-good element to philanthropy that we see in Asia, we see in Africa as well. So I think the first step to address that in terms of partnerships is really in terms almost of like, who are going to be your knowledge partners on this journey, so starting with learning, I think, is like a very important first step. There are a lot of very reputed international universities that are offering some great courses on impact investment, on innovative financing, again, some wonderful conferences, some great communities of like-minded individuals that you can also, that one can also join in order to understand a little bit more about how it's actually possible to bring the two together. And not only possible, it's actually a lot more effective, because the way a lot of impact funds are looking, or impact financing is moving towards funding solutions, is moving to like a lot more robust solutions and a lot more accountability around that as well, right? So it's actually a lot more effective use of capital. And, by looking at either courses or looking at, whether it's conferences or communities, I think the important part is that you also get access to like-minded individuals that are probably like on a similar journey to you, on a similar stage of a journey as well. And then, you can also have each other almost like as sparring partners, and, you can bounce off like these questions or issues or things that, make you uncomfortable with each other. So that was a little bit around how, we have also done it at the foundation, has been to first start by, working with different knowledge partners to increase our own understanding. From there, I think what has actually really worked for us, and again, that is a little bit, again, related to our ethos around expertise as well, right? So there is certain areas where we want to build our own in-house expertise on our own programs, but on things like impact investing, that is something that we also want to work with other trusted advisors on. So for us personally, working with impact funds, or rather investing into impact funds that are able to give us access to solutions which are either equity-based, which are debt financing-based, which could be bonds. I think for us, that is what has really worked very well, because we do not have the in-house expertise as yet, and it's probably not a very good use of our own resources and headcounts to invest in that either. So rather than try and do everything in-house, that's something that we look at third parties to provide us those kind of products and solutions, because they really have the ability to do the due diligence, and also very importantly for us to actually manage the investment, the impact of the investment through the life cycle of the investment as well, right? So we also don't want to invest in funds where there is a lot at the pre-sale or the sale, but we don't see like a very clear theory of change, the impact metrics, or how that impact is going to be managed through the life cycle, including, you know, at exit as well, right? So for us to work with third parties that already have that and invest through them is a great way of partnering into the impact investing space.
So in essence, what you're saying is get started. You don't have to have all the capabilities in-house. Try and see how partnerships can leverage and help you close the gaps of competence that you require to move ahead in executing some of these deals. That's basically what I'm hearing.
Absolutely, Frank. And I think, you know, again, I'm coming back to the point that, you know, Amma made very early on around risk taking, you know, so we take risk in everything that we do. We take a risk when we cross the road as well in our own bizarre way, right? So risk taking is just something I think there just has to be like more comfort in when it comes to the impact world as well. There just seems to be like sometimes like we put things into two buckets, like in the business world, we will be more comfortable with risk taking. With impact world, we really feel like we want to go with what's more comfortable and what's just more known. But I think this is a space where we also have to start, you know, exercising that risk-taking muscle a little bit more as well.
Yeah. So it's really exciting to hear this, because I'm a big believer that it's more important to get started than to get things perfect. Yeah, you know, yesterday I was in a meeting and someone told me something that is so stuck with me. And it says that your leadership journey is an iterative journey. Is to get started, and you'll iterate as you go along. You'll fail forward in some places, but you'll move forward. That's the most important thing. So thank you for that, Divya. I'm coming to you on a very similar thread of discussion. Do you have some, you know, comments on what are some of the unexpected specific challenges of building partnerships, and what were some of the solutions that helped you address them and overcome those barriers?
Yes, Frank. Interestingly, they are quite similar to some of the things that Divya talked about. One of them had to do with data. Data could be and became sort of a barrier in some of the partnerships to move forward. And that's because it's hard to get access to data in Africa that can power financial decisions. And so one of the first things we did was to do this research on catalytic capital and to do a longitudinal study on catalytic capital in Ghana for SME financing, identify what had worked, what hadn't worked, and to use that in our partnership building. And one of the other data points that came up was pension funds saying, we don't know what the return on venture has been in Ghana. And so we are in partnership with the Ghana Venture Capital Association doing a baseline study to deliver that data. So those are challenges that can come across. And in the partnership process, when a challenge comes up, you kind of need to problem solve around it. And in this case, we were able to deliver. Another thing was knowledge, and that's what Divya talked about. This was a new concept for from a lot of the parties involved. And so convenings, like she said, but they also asked for contextualization of the convenings. And so we've had a pensions industry collaborative made up of the 7 largest pension funds and trustees over the last year, meeting to understand this issue. And we have other convenings. We have a West Africa Deal Summit, all on catalytic capital. We're partnering with AVPA on that in May, and we have an Africa Impact Summit. You've been doing this webinar series. These conversations, these sort of settings where knowledge is shared are critical to be able to move partnerships forward, because they fill in the gap. And Divya also talked about other opportunities. So with your permission, Frank, I will share the link to the West Africa Deal Summit at the Africa Impact Summit. People can join virtually if they want to hear more about catalytic capital in the African context. And the third thing was spaces for collaboration outside the specific vehicle that you are creating or initiative you're driving. So we've joined spaces for collaboration and drawn our partners into them. And we've created some spaces for collaboration also. I mentioned already the Pensions Industry Collaborative that created a space where pensions who are competing could come together and collaborate on how to unlock financing for SMEs. We also have an enterprise support organization collaborative that is innovating around the pipeline. The pipeline of businesses was one of the gaps that had come out from the venture funds, who were saying that the smaller deals we wanted them to do were too low quality. And so, problems keep popping up, and you need a mixture of knowledge, data, and collaboration is just the space to do the problem solving in a sustained way. So our collaboratives are usually fixed term, and then when they work and deliver, we can extend them. And so it creates a momentum for the ecosystem to work together.
Yeah, and I think, as I hear you speak, Amma, the space needs you to be able to roll with the punches.
Yes.
It's very there's a lot of unknowns, but I think what drives all of you, and I listen to all of you talk, is just the light at the end of the tunnel, the value you can create from doing these things, whatever you're doing. I mean, I think, Divya, a comment you made there about making capital more effective is a really significant comment. That we are facing a world where we have more problems than we have resources. And how do we, in the context of that, magnify the impact and the leverage that our existing resources are able to deliver in the current context? If I look at things like aid, for example, aid to many parts of the world is declining. We've seen huge aid cuts from the likes of the US government and the UK government. So this trend is something that we have to do if we've got to keep momentum of the development momentum and structures and targets we're trying to chase. So let me ask you to just share a couple of things before we go into. I see some nice questions in the Q&A chat. Before we go into addressing some of those questions that are coming through, and please, to the audience, by all means, keep adding those questions, and we'll get to them in a short while. So, in the work that you've done, and I'll start off with Amma this time. I'll go to Divya, and then when you what are some of the lessons you've learned in a brief just conversation you can have with us? If you think about the lessons you've learned that you'll apply to future collaboration engagements, and what do you think the audience can take away from what you've done to avoid mistakes, but also accelerate impact?
So I would say partnerships are key. You can't do something truly innovative, never done before, all by yourself. You need at least some outside the box thinking to engage with, even if you have all the financing yourself. But many times you need certain elements that are missing. And so by coming together with others, you are able to actually achieve something big. And if partnerships are key, then you need to give yourself space and time to problem solve around the partnerships to make them the strongest possible. Just like you said, it's an iterative process. So assume good intent. You're working with partners that are different from you. And when they raise challenges, look at it as a problem to be solved, and ask yourself and ask them, how could we work around this? What would make it, when pensions say, we can't do this because we don't have data, what kind of data could we deliver, and how would it need to be structured for you to feel comfortable to make a decision? And I think if you have that perspective, you will be able to deliver. You will be able to deliver innovative solutions at a cost that allows you to make money commercially and deliver the needs of pensions and deliver the impact and all the other things when you're intentional.
Thank you, Amma. Divya?
Thank you, Frank. So for us, collaboration is actually very key to how we operate. So we have seeded and we have participated also in a number of different collaborative philanthropy models, in particular in Singapore and in Indonesia. And I think, some of the things that are, I would say, lessons learned, as well as things to kind of like keep in mind for the future, are some of the most basic things that I think we still have a tendency to overlook. And I think the first and foremost one is really aligning on goals, whether those goals are tangible or intangible. having alignment on what are the goals of everybody else who's coming in to either fund the project or, our solution partner, which could be a nonprofit, a service provider that's actually working on the solution. Are we all looking at the same goals as well, right? And how are we measuring it? Like, how do we know whether we're succeeding or not? So though it's very basic, I think it's really, really important. I think from a funder's perspective, I think it's very important to actually go and see the work on the ground. I think very often funders also tend to want to, support projects without really understanding what are the realities on the ground. And as a result, when things start becoming rough, there tends to be more sometimes impatience than there should be, So I think when you can really see, what are the realities on the ground in the solution development and implementation, this kind of like circumstances that people are working under, I think it really helps to build that empathy as well. I think definitely having certain mechanisms around having regular updates, but also using those kind of regular updates to build community amongst all the people across the table. So in some instances, we have done learning journeys together as funders. In certain instances, when we also have like our reporting meetings, we still take some time, which could be like even 30-45 minutes after the meeting, to actually spend some time with the other funders to kind of have offline conversations, because that is again where more collaborations opportunities also emerge. So having time around that. And I think really importantly, just having conflict resolution processes in place very early on, so not waiting for things to like kind of get a bit messy before, you start talking about who gets more voting or, who's been more involved. So should have like a decision making, or the louder voice in the room decides, what is going to be the way forward. I think having some of those processes upfront is, I think, really, really important.
And Divya, I'm going to ask you a particular question, and maybe Onyung, as you're doing your lessons learned, I'd be keen to hear from you as well. And I think the audience will be keen to hear this from you, because you work across Africa and Asia. Do you find that you're finding lessons transferable across those two continents based on the work that you're doing?
Absolutely, Frank. I think, just coming back to what you said earlier, I think issues are very similar, in many different parts of the world. Some of the solutions that we're seeing are also similar. And I think at the end of the day, we are also all humans as well, right? So some of the things that we're talking about, collaboration is very people-centric at the end of the day. So some of the things that we're talking about just tend to be like, human-related issues for us. And I think these things about the importance of communication in a collaboration is just, again, something I cannot highlight enough. And I think that's something that we see, whether it's in Africa, whether it's in Asia, there is a difference in the style of communication, I would say. I think in my experience, Wanyung may have a slightly different experience. I think in Asia, I think for me in Africa, the communication style is definitely a lot more open, and issues will be highlighted and will be, people will feel more comfortable talking about, what isn't working right and some of the failures. Whereas in Asia, it's something that we probably can see, and then we have to kind of like tease out in conversations, or we have to like pull out in conversations. But I think, what would make for successful collaboration, all of these elements of like alignment, communication, etc., I think is definitely the same across both.
Yeah, and it's interesting you say that, but actually the reality, Divya, as well, is that even within Africa, even amongst ourselves, communication is very different, depending on which country you're going.
I know when we talk about Africa and Asia, we forget how many countries comprise, Asia and
exactly
Africa as well, right? And they're all very unique in their own different ways. So yeah, we tend to kind of like lump them together, which is also not.
Yeah, we have to be responsible to make sure people understand that Africa and Asia are not one continent. That Africa has 54 countries, Asia has so many countries, and there's such diversity even within those respective countries.
Absolutely.
But what about your lessons that you've gathered over time, and any contrast between Africa and Asia?
Yeah, sure. So the first thing is, so today's title is Exploring Partnership and Alignment, right? And when we say partnership, actually, I do think it's really important that we consider our investees as our partner. Because in the end, when we say we're doing blended finance, the ultimate goal, or one of the goals of doing blended finance, is to build a market. And when you're building the market, it's not actually the investor directly, but the market is built through that investee company. So in a way, you should really see that company as a partner and not just as an investee or your portfolio company. I think that's one important thing that I wanted to mention. And another thing is, as an impact investor, you have to work with different stakeholders, meaning you have to work with a grant funder, you have to work with private sector, you have to work with the companies. So there are different stakeholders. One thing that you shouldn't do is compromising and try to balance out different interests and different requests or different needs, because in the end, it's an investment decision for us. And that decision is solely independently should be done by us. And that should be clearly delivered when you're structuring the blended finance, that this is what we're doing and this is how we're going to use that grant fund or any additional fund. So those two things I just wanted to mention that I think are good, important lessons to be learned and applied to anything coming in the future. The part about, do I see similarities or differences between Asia and Africa? Well, to be very honest, we don't have that many cases in Africa yet. However, in terms of making the investment, I say it's a global protocol everywhere. So, like it's either in equity, it's in either loan, or it's a blended finance. So that's a protocol that we all have and work with. But at the same time, what I notice is that the environment is quite different. So for example, when you're working with the CEO or the founding member or any member, any employees in a company, and all of a sudden, one of the person is sick. And when that, that situation happens, then how you deal with that situation is quite different, right? In some health services available. In some places, they're not, right? And when you need to keep this conversation going up, basically in order to value up the company, as a GP perspective, that would be portfolio management. We need to maintain this, understand this different environment, and also understand how we can react or cope with different situations of those different environments. So I say, again, in terms of investment, the structures and everything, it's quite standard protocol. However, when it comes to actually valuing up the company, working side by side with the company, there's so many different issues that you need to be aware of.
Excellent, excellent. Thank you, Onyeng. So to my panelists, I'm going to run through a couple of questions that have come in from the audience. I'd ask you to be as brief as possible so we can cover as many as we can in the next 5 minutes, because we're coming towards the end of our webinar. So the first one is to Divya, and this question is from Bawani Moria around how can philanthropy reinvent itself to become more catalytic and unlock new forms of capital? So as brief as you can, Divya.
Yeah, I think it's going to be a two-way street. I think philanthropy is already becoming a lot more progressive, especially with the next gen. But I think from the philanthropy perspective as well, I think we need to see more results on different sort of blended finance products as well, right? We need to also start seeing a little bit more of a track record within that, and that will also encourage more philanthropists to invest in that. So Frank, trying to keep it as brief as possible.
Okay, I always say the evolving role of philanthropy today is about, especially if we can test new markets, new products, new services, to the point of proof of concept where more commercial capital can take that on to scale would be fantastic. And that's what we probably should be looking at as well, just to add to your point, Divya. Onyeng, just reflecting on Divya's earlier answer, this question is from an anonymous attendee on impact measurement. From the perspective of an impact investor that sits more on the commercial side, have you partnered with partners who could support you in measuring impact for your investments?
Sure. So, so impact measurement and management, short IMM, it happens in every cycle of the investment. So it happens in the due diligence process. It happens in the portfolio management process, and also it happens, let's say that you're doing an exit. So IMM is something that you always should be aware of. Like, Divya mentioned, we also do assessment of their impact by analyzing the theory of change, trying to define their impact indicators using RS Plus. All of these efforts are put in actually to define the impact. At the same time, what I want to emphasize is that for very early stage companies, there are not that much impact that are created actually. Because in order for the impact to be really sustainable, you have to be scalable, and that scalability should come with financial sustainability.
Yeah.
If you don't have that financial sustainability, then what will happen is you could claim to create certain impact at a certain time period, but then that will fade away very quickly. So the perspective that we have is these companies, especially when we are investing, we tell them that it's really important that these companies go by SME models rather than a unicorn model, where you keep drawing in more capital, increasing the indicators, and then later on trying to meet the BEP points. But SME models is where you create your revenue, profit, and then reinvest, revenue, profit, reinvest. So that's sort of the engine that you have keep on going within the company for the financial sustainability in order to create the impact.
Okay, awesome. Zoe, to your question, please get in touch. You can find me on LinkedIn. And for anyone in Africa, we're running a catalytic investment training program as part of the C3 work in May. So if you want to learn a bit more about catalytic investment, please get in touch with me. AVP will be running a program sometime then. So in 20 seconds each, Aman and Wonyung, there's a question from Anna to address to both of you. She's from Holland. On the question about how much have you directly worked with traditional philanthropic foundations on blended finance mechanisms, and what's your experience been like? What do you think are the barriers for philanthropic foundations preventing them from getting into this space? Just 20 seconds each, if you can.
Yes, we have worked with philanthropic foundations. We need to show the alignment between their philanthropic goal and what is commercial, or usually we work with them in ecosystem gap filling measures. So for example, get funding from MacArthur Foundation and create the research product because it'll unlock catalytic capital. And I think that as we should find those win-wins to draw in more philanthropic capital.
Okay, thank you. Onye?
Yeah, sure. So currently and previously, we are working with COICA. So that's the government body doing the ODA funding. But one of the things that we're preparing is to actually get in contact with the family offices and mid-cap size corporations and actually preparing a deal that's actually attractive for them to make their either philanthropic investment or the grant to the teams.
Okay, excellent. So to my speakers, thank you so much. This has been an excellent conversation. I'm so, a bit kind of flustered that we didn't get enough time to dig a bit deeper, cover all the questions. But this is a conversation that will be ongoing over the next couple of weeks. So from what I've heard you guys say, all of you have in a position where you are getting started. You're not waiting to learn too much. You're learning on the go. You're factoring in things like what is the impact on your beneficiaries. I think you made that very clear. This is the whole purpose of impact investing. Amma, I think you've made it very important, the importance of partnerships, the importance of realizing that you can't do this on your own. You need to bring along other players. And Divya, your comment about how do we ask ourselves, with the little resources we have, how do we deliver more impact, is very pertinent to the conversation of today. I'd like to thank you very much for your time and your contribution to this conversation. I'm hoping this will be an ongoing discussion which we are all committed to as part of the regional networks under the IVPC family. And thank you for your time, and to my audience, really gracious. Thank you for making time. I'll hand over back to Ashma to close the webinar.
Thank you so much to all of our panelists, Divya, Woon-Young, Amma, and our moderator, Frank, of course. Some really great insights and a lot of learning on navigating the complexities of creating fruitful partnerships. And there was a mention of how knowledge is so important. And so there is a lot more knowledge to come through the C3 partnership that all of our networks have been working under. The next Catalytic Capital webinar will be brought to you by IVPC in June, featuring EVPA in Europe and Latin Pacto in Latin America. And there are several other events happening in different regions related to Catalytic Capital, which you can see on your screen, including a dedicated session at the AVPN Global Conference, which is happening in June in Kuala Lumpur. And we'll be sending you details in a follow-up email with everything you can see there and how to access it. And finally, the culmination of all of this work will go into a global report that brings together the findings of all the networks. That's going to be released later this year in a concluding webinar. And so look out for that. And otherwise, many thanks and see you all soon at another Catalytic Capital event.